Happy Saturday, everyone. How are you doing today? Hope you're having a good day. Just want to go over what I saw this morning. Again, we do this each and every day. I call it the Daily Millionaire News because I'm honestly trying to play on the YouTube algorithm. But it's really about what's going on in the business world. How is it potentially impacting real estate investing, cost of capital, consumers, renters, all of those good things. I've been watching it now for close to 20 years and kind of share with you what I see each and every day. So first off, got to say I'm excited doing my live stream with my students here at about 9 o'clock. So that is going to be interesting. Warren Buffett. Yeah, that's where we're going to start today. Good guess. Looks like Warren Buffett has sort of released his earnings for the quarter, right? Berkshire Hathaway, the holding company. First off, he is doing his investor, road show that he usually does every year, virtually. I think it's at 11 o'clock Pacific. So I might be tuning in for that. Honestly, though, I'll probably catch the replay because I will be enjoying the day with Olivia. But first and foremost, I read the headline, Berkshire Hathaway loses $50 billion. The first thing I thought was, holy cow. Buffett lost $50 billion. No wonder. Hi, Josh. No wonder he's not buying anything because, again, I seem to recall he had $130 billion in the bank. Then you see Warren Buffett loses $50 billion. I'm like, shoot, no wonder he's not buying anything. His cash burn's going to kill him. Then, of course, you read the article and you realize, you know what? He's fine. Operating profit was almost $6 billion. The reason the $50 billion print happened is because Warren has to report, what does it actually say? There's an accounting rule that requires Buffett to report unrealized losses from stock. So basically, I don't know, he has to, when the stocks go down, he gets hammered and he has to report it. So again, operating profit for Berkshire Hathaway is a far better number. But again, GAAP reporting, Warren reported a $50 billion gap or a $50 billion loss. And again, why? Well, it's because he owns American Express, Wells Fargo, Bank of America, and 4 airlines. Let me see if I remember. Delta, American, United, Southwest. Kind of interesting. That those stocks got hit hard. And of course, when you own nearly 10% of the company, you're going to have a reporting loss. So again, I was shook when I saw that $50 billion loss, right? Top line, Berkshire Hathaway loses $50 billion. I'm like, oh my God. But again, it's operating profit just shy of $6 billion. Company's fine. The good news is when this all turns around, and it probably already has, at least to some extent, he'll have an increase next quarter, and we'll see what's going on. He's still sitting on $137 billion in cash. He is still waiting for what he calls an elephant-sized acquisition. What I will be listening for today is really what is going on. Really, what's going to be really important for me is 2 things. One is what is Buffett's timing? Because I think the financial crisis was far more in Warren's sweet spot, if you knew what I mean. He knew the markets better than you and I, and he could sort of see where the bottom was forming and thus take advantage of that. I think this is a more demand and health problem. And if you know Warren, he has this thing, you stay in your lane. This isn't his bag of tricks. So it will be interesting to see what he talks about timing. That is interesting. And then again, at least Charlie Munger talked about, hey, they have a couple of businesses in their portfolio that frankly need to shut down, right? They were being carried along because they were in the Berkshire family and the other businesses were carrying weak performers. It'll be interesting to see if he acknowledges who they are because, man, if Warren has to put a business down, there are probably a lot of businesses that are just structured for yesterday and they need to be restructured for tomorrow. And I just think that's a reality of life that we're going to have to go through for the next couple of years, unfortunately. Next up, gotta love Elon Musk, right? Talk about a cult figure. Um, I'm guessing there's a lot of angry tweets today at good old Elon Musk. Actually, probably started yesterday. Comes out and does a couple of things. First out says, "Hey, my stock's too high. My humble opinion." Whack, 10% off. That's gotta hurt. Then the one that really caught my attention is he's selling all worldly possessions. Did you see that follow-on tweet? Not gonna own a home. I don't know about you, but when I read that, my first thought was, holy cow, Elon's raising cash because he's going to go on the run. But then I'm thinking, he can't go on the run. He's too famous, right? Where's he going to hide? But it was funny. That's where my mind went. I really don't know how to read that second tweet. I think the tweet about his stock price is right. I mean, it was crazy high. And again, he's playing chess. He's trying to get the California government to let him start making cars again. So again, he's playing, he's trolling Gavin Newsom and others that are basically saying, no, you can't make cars in Fremont, California. So, I think he knows what he's doing there. But that raising cash one, where'd that come from? That one just, I don't understand that one. Next up, looks like Fannie Mae profit fell 81%. They took a $2.7 billion reserve for bad debt. That's not enough. That's just not enough. Fannie Mae's bad debt reserve is going to have to go up. Right now, there's about 7% of loans in forbearance. What really scared me when you dug into the numbers, they're forecasting. Fannie Mae is forecasting 15% of single-family homes and 20% of multifamily. That's a problem. That's a problem. That's not good. That's a potential ripple effect for years to come. That's not good. That's just not good. That is a fright. I had to read that twice and make sure who was saying that, because sometimes, they could be quoting somebody else, but no. Fannie Mae's internal economists say 15% of single-family homes will eventually be in forbearance and 20% of multifamily. Those are frightening numbers because, again, that's just a problem. So anyways, it just means that this is going to be long. It's going to be stretched out. It probably doesn't even start till 2021. It's just going to be messy. Next up, China trade war. What are we doing? Why are we trying to pick a fight now? You don't go punch a bully in the nose when you're freaking injured and bleeding. That's not a good idea. I don't disagree with going head to head with that country, but can we heal ourselves first? Can we be a little stronger when we jump into a cage match instead of being already beaten up from something else? Timing, man, timing. Come on, we're smarter than that. I did write down something. I'm wondering where the hell Joe Biden is. I expected him to be a little more front and center, talk about caring for people and other ideas. Maybe he's waiting until the official nomination, or convention or whatever you call it. It just seems like he's hiding, or maybe he's just not in my news feed. Maybe that's what it is. I don't know. But it does feel like he's hiding. But again, I could be wrong. I don't know. Oh, for sure, Anthony. I think Tesla is going to look at this and going, I'm getting the freak out of Dodge. My guess is, and I thought this yesterday, is I bet you Tesla very quickly starts building a manufacturing plant in Las Vegas. Nevada's going to be smoked. Nevada's going to start handing out gifts to manufacturing plants, tax incentives and all of that. I would put significant money, let's say $1,000, that I believe Tesla is manufacturing cars in Las Vegas, or at least Nevada, in the next 3 years. It takes a while to build a manufacturing plant. But yeah, they're out of California. He has clearly had enough of the socialist California. He wants out, no question. I already talked about 7.3% of mortgages in forbearance already, and the forecast of 15. It's scary. Do you see that somebody said American Airlines is worth $1? $1. Last time I checked, I think the stock was at 10. I didn't check yesterday close. Maybe it's at lower than that. Hi, Claudia. But yeah, it's I think I think there just has to be consolidation in the airline space. There are too many. There are too many routes. This is going to be long and slow. Last I heard, American Airlines maybe be the most likely to be acquired. They just have the most debt on their books, and to have an analyst come out and say you're worth $1 is frightening. And most of these big airlines have been through a round of bankruptcy once already and restructuring. Um, it wouldn't shock me if they try that route as well. So, very interesting times. Simon Properties. Finally, some good news for a mall operator. Looks like they are opening 49 malls here this weekend. So, congratulations. Let's all wish them nothing but success. But I think there's a couple of things we need to realize is just like all the other businesses that are reopening, the cost structure has changed. And really, that was highlighted by Amazon. Amazon told us they're going to be spending roughly $4 billion in Q2, all of their Q2 profit, on essentially expenses and investments around this health event and all these things. So all businesses are going to have to be spending more money just to operate. And again, the whole cost structure of retail, of restaurants, of business, of office, of retail is just different. And that's why I think there's going to be a washout with bankruptcies and all of these things. Yes, lots of people leaving New York is my guess for sure. So again, I think we wish Simon Properties, well, all the mall operators. But again, the cost structure is going to be different. We're going to have to restructure things as we get out of this. The new normal, or whatever we want to call that, is interesting. Yep, international travelers. It's going to be messy and slow and painful, but we will get through this. I put out that depression video the other day, and people think I'm being negative. No, I'm trying to be a realist. I'm trying to protect the downside. I'm excited by what's coming, but I realize it's going to hurt a lot of people, and it's going to be very different. It's going to be choppy and messy. And then the last thing to talk about is China. The reason I want to talk about them is we need to watch them, right? They're 7 weeks ahead of us in many respects. And where I went with this one is, yes, they've been quote unquote open for 7 weeks, but it's taken until week 7 until the customers start coming back. So it is interesting that you need to realize that just being open doesn't mean revenue. In fact, opening means cost. That's one thing that we're seeing from restaurants. They're telling you not to open dine-in because they don't have enough tables to cover the cost of opening. Think about that madness. They're barely hanging on with delivery and takeout. They don't want to open for dine-in because they have half as many tables. They still have to hire all the staff, and they can't cover the cost. That's just the reality. So being open means expenses go up in the short term for sure with lack of revenue. People aren't coming out, and at least as according to China, it's taken 7 weeks for the customers to start venturing out of their homes. So we gotta watch this. So it is going to be interesting. So in the end, that's what I got for you today. Again, we do this each and every day. Hit the little notification bell if you want to catch on. I do it around 7:30, but we will see what is going on. So at the end of the day, take care. Have a wonderful day, and let's see what Warren Buffett has to say later today. Bye.